Hello, welcome to everyone participating in today's webinar, 2021 Financial and Compliance Tools for your 8A or small government contractor business. My name is Yevgeny Sahenko, and I'm a manager in the Outsourced Accounting and Advisory Services Group at GRF CPAs and Advisors, and I'll be your moderator for today. So before we jump into the material, just some quick housekeeping items you'll need to know to earn CPE credit. So anybody wanting CPE credit for today's webinar must complete and submit a short evaluation survey that's going to appear automatically following our webinar. You're going to be asked to recall CPE words that I'm going to give throughout the webinar. And please just write these words down because we're not going to give them beyond the 3 times that we give them during the webinar. So they will not be provided again. If you do have any technical issues or questions during the discussion or our webinar, please use the questions function in Zoom, and you will be able to speak with our administrator for assistance. Our slide deck and the recording from today's webinar is going to be available on our event page on our website. And then finally, any technical support or CPE questions, anything relating to that, they can be addressed to Nathan McLeveen at nmcelveen@grfcpa.com. So with that, today's learning objective is provide financial and compliance tools for small businesses and government contractors with respect to SBA 8A requirements for compilations, reviews, and audits, discuss some of DCAA's requirements for provisional billing rates, and finally introduce some cloud-based solutions such as Bill.com, Nixonia, and briefly discuss the advantages of Intacct versus QuickBooks Online to streamline some of those accounting processes and systems that you may be using. And today's speakers, first we have Paul Calabrese. He's a principal in the Outsourced Accounting and Advisory Services Department at GRF. Steve Lyons, he's a manager in OAAS. And then finally myself, I'm a manager in OAAS as well. And with that, I'm going to hand it over to Steve.
Good morning, everyone. And again, thank you for joining today's webinar. I will be discussing the financial statement requirements for 8A companies, as well as providing recommendations for compilation engagement and a benefit for those contractors who have not had financial statements prepared in the past. Let's get started with a quick overview of the common level of financial statement services. They are an audit, an audit engagement, a review engagement, and a compilation engagement. An audit engagement provides the highest level of financial statement services. A review engagement provides limited assurance in the financial statement services. And a compiled financial statements provide no assurance. Just a quick note on the review and audit engagements. Your CPA needs to be independent third party to perform those services. In a compilation, your CPA does not have to be independent, but must disclose that in the report. And with that, I'm going to turn it back to Yev for our first polling question of today.
Perfect. Thanks, Steve. So the first polling question, pretty simple one. Have you had an audit, review, compilation, or any of those 3 performed in the last 1 to 2 years? Simple responses, yes, no, or you're not sure. So please take a moment to record your responses. At this time, I will provide the first CPE word. The first CPE word, again, if you want to get CPE credit for today's webinar, that first word is limit, L-I-M-I-T. Again, just a reminder, we will provide this word just now, so please write it down if you want to receive CPE credit. Again, the first CPE word is limit, L-I-M-I-T.
Okay, so that's great. Looks like majority of our audience has had one of those 3 services in the past. Okay. So as a part of the SBA's 8A program, there are different financial statement requirements based on your annual gross receipts. Gross receipts between 0 to 2 million require a compiled financial statement or an internal financial statement from your company's accounting system. Annual receipts between 2 and 10 million require review financial statement, and annual gross receipts of 10 million above require an audit. Some additional notes here that the financial statements are due to the SBA within 90 days of your accounting year, end of your accounting year. However, if you can't meet that deadline, you are able to apply for an extension or be granted an extension to submit the financials. Additionally, in the presentation of the financial statements, the revenues need to be broken out into these 3 categories. So contracts that you received as a part of the 8A program should be included in a component called 8A revenue. Contracts that you received that are not a part of the 8A program should be a non-A revenue. And then if you're doing any commercial work, that should be separated into a commercial description. I can speak to this because I prepared several of these engagements where we've actually had to go back and restate the financials because the revenues were not categorized in these categories. So it's a tip for this is to make sure you're tracking these revenues throughout the year to ensure that you're categorizing the proper groups. For the remaining part of the financial statement presentation, I'll be discussing the benefits of a compilation engagement. Listed here are some of the benefits of preparing compilation, especially if you haven't had these services or haven't had financial statements prepared in the past. Some of the benefits listed here are first, an introduction of your accounting department to preparing financial statements. This gives you a chance for you or your accounting team to learn the financial statements as well as the process of preparing financial statements, the disclosures, the notes, all components of preparing a financial statement. This is not to say you can't learn this in the audit or review, but with the audit and review, your CPA or the CPA has to be independent. And as a result, due to scope limitations and limitation of independence, they may not be able to fully provide all the services needed for you in preparing the financial statements as it would be in a compilation. An income tax basis preparation compilation. This is easy to prepare. We certainly recommend this if you haven't had financials done in the past and you prepared annual tax returns. The income tax basis compilation will follow the tax basis, follow the tax return. I've actually had over the past 2 weeks clients where they haven't had financials prepared in several years, long-time clients, and needed a financial statement. And because they prepared the tax return, we was able to easily prepare the income tax basis compilation. Satisfying of any agreements or needing external financing. So if you have a line of credit, any loan covenants, a compilation will be able to satisfy those needs. Or if you're looking to obtain financing and having a set of financial statements on hand to satisfy those needs will be beneficial as well. And then last, an opportunity to review the company's annual performance. So although a compilation does not provide any assurance, they're still prepared from a CPA. So that gives you an opportunity to review from a CPA the financials at the end of your year. And the CPA still reviews the compilation to make sure it's adequate and it makes sense. So there's still procedures in there while not providing insurance to make sure the financial statements are reasonable. Yeah, did you want to add any feedback on the compilation and year-end and evaluating the company's performance?
Yeah, that's a great, I think you kind of already touched upon it, Steve, but just to reiterate the point that while, as Steve kind of very succinctly described, the compilation doesn't provide any assurance, but that's not to say that the firm doing the compilation for you, I would argue they probably, if they do notice something in some of the supporting documentation provided for those financial statements, if they notice anything completely off, I do think it's kind of incumbent on them to at least ask, and not just if they see something completely off, just move on. I would argue it's not just coming in and putting together the financial statements. It does give you an opportunity to kind of have the CPA look at it and say, have you looked at your unbilled schedule? This kind of just looks off. I'm not going to dig in, but it does look a little off, and then you can have that discussion. So I think there is that implied benefit there as well.
Absolutely. I totally agree. And in preparing those engagements, that is one of the steps that we do, always to make sure the statements are reasonable. And if something doesn't, just send it back and just inquire the client to maybe, dig in a little bit deeper. But, in doing that, that lends to the preparation of it.
Yeah, exactly.
Okay, we've talked about the benefits of a compilation. Let's discuss some of the processes of ensuring that there's a smooth process in preparing a compilation. So throughout the year, you want to make sure your accounting data, your financial data is recorded in your accounting system throughout the year. This has actually gotten a lot easier over time with technology, and a lot of accounting systems talk with their financial institutions, and it's downloading the transactions throughout the year. This has become no longer for the most part, a manual process. It's technology that's doing all the work, which certainly helps in ensuring all your data is at least in your accounting system. You want to make sure you're doing your account reconciliations, your bank reconciliations throughout the year. If you have outside schedules that if you're tracking outside schedules, ensuring that those schedules agree to the balances that are in your accounting system. You want to make sure that those reconciliations are done as much as you can. And then finally, once you've kind of done steps 1 and 2, meet with your CPA to schedule the process, to begin the process of compilation. Ensure that you also have access to source documents. They may not need them in a compilation engagement, but as we discussed, to make sure the statements are reasonable and make sense, they may ask for a bank statement, or if you have a loan or a line of credit, they may ask just to look at the statement. So it's just good to make sure that that stuff is readily available. And as we discussed, these are the components of a compilation. I'm going to show you a template of a financial statement that we use for our government contractors to sort of highlight these points, but there's a report, there's the actual financial statements themselves, and then there's the footnote disclosures. Keep in mind, the compilation engagement, the footnote disclosures can be removed or omitted. And please go forward. I'll share my screen and just 1 second here. So this is a sample compilation that we use for our government contractors. This is the title page. Obviously, this page will have the title of your organization or corporation, and then the year we're doing the financial statements. Table of contents. Here, I want to just focus on the report of the compilation. Here, we disclose that no assurance is provided, and that we do not provide a review or audit. We did not provide an audit and a review as well. And we provide no opinion or express any assurance on the financial statements. So as we discussed before, compilation provides no assurance. The balance sheet, your assets and liabilities and your equity. It's a required financial statement in the report. Statement of income, another required financial statement in the report. Also here, as I mentioned before earlier in the presentation, that revenues are broken out. Here you see the contracts received through the 8A program. If you have contracts that are not 8A, your commercial revenue, and then if you have any other income, that's there too. That could be investment income, or for instance. Then we break out the direct costs, your indirects, and then obviously your net income.
Hey, Steve.
Sure.
So this is very helpful for those of you who have to reconcile if you have an incurred cost submission, if you're dealing with DCAA and you have the ICE model or some other incurred costs. I know USAID uses as well as DOD. Here you can see, just by having a compilation, you can see the direct costs broken out, the different layers of indirect. In this case, it was a fringe overhead and G&A, or there could be some other combination. And it's just a nice, and you get the total expenses. It's a nice starting point for doing this rather than just, having your internal records. If you don't have a review or an audit, it's a nice, clean way to start the process.
Absolutely, and thanks for that, Paul. Statement of equity. Just to lay out the structure of the company's equity. This will depend based on your tax structure or how your corporation was structured. So it could be members' equity. In this case, we use common share, additional paid in capital, and retained earnings. But that's just more of a presentation. And the activity during the year, if you took money out the company, distributions, or if you put money into the company, contributions, the company's net income, net loss, all those components will be seen in the schedule here in the statement of equity. Statement of cash flows, just a statement that shows the inflow of your cash throughout the year from the different segments of the business, from your operating, financing, and investing, if you have investing activities during the year. Also, I want to note here too, on the cash flow statement, what makes the income tax basis. So when we discuss about some of the benefits of that engagement, this statement of cash flows can actually be omitted from an income tax basis compilation. So if you choose to have that compilation, we wouldn't have to prepare this statement. Next are the disclosures. As we discuss here, we discuss, we disclose the organization, the services it performs, the data formation, incorporation, all information here will be disclosed in the footnotes, and also your significant accounting policies. A part of every corporation, they will have this note 1 of significant accounting policies and description of your corporation and business. Now, what may change is based on your company's asset liabilities, sort of what you have on hand as far as loans, agreements, line of credits. If that obviously is not included in your financials or you don't have that, then we wouldn't disclose it. So while note 1 is core for all corporations, the details of the notes would change based on your assets and liabilities of your company. Again, going back to the compilation, the footnotes can be omitted as well. So as we discussed with omitting the cash flow in the compilation, you can remove the footnotes as well. Again, for ease of preparation, the footnotes and the cash flow statements and certain types of compilation can be removed. As we scroll down here, these are some of the accounting policies for your assets. So if you have receivables, fixed assets, we disclose your revenue recognition. And then lastly, I kind of want to drop down to the end here where we'll provide a supplemental schedule of indirect expenses so you can know your rates. We didn't provide the details of what makes up the pool and the base, but obviously that will be included with your compilation or can be included. But what we have here is the data that reconciles your total expenses that's included in in the pools and the base, and this number should tie back to the total expenses on the income statement in the face of the financial statements.
So Steve, this is a very important document for even usage in terms of like what historically have we done during the year? If you don't put together your indirect rate, now you have a firm as a supplemental schedule to this compilation. We have an indirect rate schedule, whether it be G&A, overhead fringe, whatever you would like to see as the client. This is very useful information. And if you happen to be a government contractor that's typically a sub to a prime, and in some cases they want to see those rates, and I know a lot of GovCons want to hide the rates, but should you need to provide those rates or to any agency, at least they can see that an independent firm has at least presented them in a certain manner. You think that'd be helpful?
Absolutely. And thanks for that commentary, Paul. Absolutely. And that's, again, these financial statements that we do for our 8A as well as other contractors are geared for that purpose. And that concludes my section of the presentation. I'm going to turn it over to Paul.
All right. I think we'll start with my section with Yev going into a polling question. So we'll see the PowerPoint and.
Sure. Yeah. Thanks, Paul. Yeah. So we've reached our second polling question, and our question, it should appear on your screen shortly. The question is, are you struggling in forecasting your indirect rates for each upcoming fiscal year? Again, pretty simple answer choices: yes, no, or you're unsure. While everybody's submitting their responses, I'm going to provide the second CPE word. Again, just a reminder, if you want CPE credit at the end of the webinar, you will need to write these words down and provide them later on for the survey that will follow. The second CPE word is data. Again, please write these words down because you'll need them for the survey. Again, the second CPE word is data, D-A-T-A.
All right, so we have some people that are able, which is good to know, that you're able to prepare and forecast your indirect rates, but a little bit more than half are having difficulty projecting indirect rates. And so that will give us some impetus into our presentation here, this short one. So today, I'm going to be talking about, yes, provisional billing rates, but a little bit about the need for an annual budget, which would facilitate the projection of your provisional billing rates. And this is the unique part that those of you that have to deal with a cognizant agency because you have cost plus fixed fee contracts. In this situation, let's just focus on DoD with DCAA, and just the fact that they'll want to see your projected rates for the upcoming year. It's usually because you have CPFF contracts, and this will come from DCAA. So if Nathan can put up the letter, we have a standard letter. It is very current. I had to block out who it was going to, but you can see all the detail of this letter. And again, if you have CPFF contracts, this is where you're going to see it. This is where you and DCAA have a relationship. And you can see the top part there. It talks about a detailed billing rate proposal. And there you notice the underline, if we don't receive this, then we'll establish our own rates. And now, Nathan, if you can go to the bottom. So DCAA, unfortunately, that's perfect, has a way. Sometimes government contractors don't cooperate, and they are an audit agency. They have to do that. I used to work for them at one time, so I know the struggles they go through too. But if you notice, I highlighted in red a font comparison. They'll want to see a comparison of your forecasted and actual rates for the prior 2 years, so they can see where your rates are going and coming. And then in the blue, they say a listing of forecasted incurred pool expenses by account. So this is where you're going to have a projection for the year. And if you have an annual budget and you go down to the GL account level, it can be very helpful. Okay, if we can move to the second page and center it. Perfect, Nathan, thank you. And so here, you can see, again, they stress in the kind of orange yellowish, a listing of forecasted pool expenses by account related base amount. So even the denominator allocation base is made up of general ledger accounts. They're going to want to see it. They're going to want to see you segregate your unallowables. Even if you have 9,000 accounts, you would just show, everything that's allowable, but also show that there is a tracking through your 9,000 as an example, general ledger accounts for unallowables, but that they're segregated. And then at the bottom, it then again defines what a provisional billing rate would be for, and that's for public vouchers, which are CPFF, and also progress payments, which I believe are fixed in nature. And so those are the reasons why they need it. They also say, it should be as close as possible. but that's kind of hard to do. You need an 8-ball for that. Okay, if you can go back to the PowerPoint. So in a minute, as Nathan pulls it up, the PowerPoint back to the right thing. Okay, next slide. There we go. Well, that's perfect right there. So we need to have, and I'll talk in a minute about the need for an annual budget. I have seen a few government contractors that are under 10 million that have the discipline to prepare, but unfortunately most don't. And so, you know, there's a need for that. But before I get to that, I just want to say, what if you don't hear from DCA? Not that you want to not hear from them, but it may be because you have only fixed price or time and material and no CPFF contracts. And so in a sense, you're not on their radar. Sometimes the radar for DCA is you get your first CPFF contract and the procurement office or your administrative contracting officer is asking for a pre-award survey. And then DCA comes out, or your cognizant agency kind of does that SF 1408 review. And then you get to begin the relationship with DCAA. So there's a good question, you know, is there a resource for how we can develop rates? There is some basic stuff. If you go to DCAA.mil, Nathan, can you go back to the prior slide? If you go to www.dca.mil, I believe it is, you'll find there is at the top, there is guidance for, or they call it information for government contractors. And you will see in there under the incurred cost part and also under proposals, where they will show you a sample of what a numerator and denominator, a cost pool and base will look like. So there is some of that training or pictures showing you how they're set up. And I would encourage you to go. There's a lot of great material that DCA provides. Great question. Or the other reason why you may not see a relationship with DCA is because you're a sub to a prime. And if you happen to be a subcontractor to prime, and that's the way a lot of government contractors start, is that they start as a sub under a prime, and therefore DCA would not see you or have a relationship with you unless, again, you had, even as a subcontractor, cost reimbursable contracts. Now, reasons for the benefits for having an annual budget and how you can put together indirect rates. And that's just, you know, it just comes down to performance management. How am I going to know what's going on? I don't see the 20,000 foot level. I can't look and see what's going on. So we want to see, you know, what personnel are on what contracts and what they're performing and on a total company basis, like projecting a labor distribution. We want to know what financial resources in terms of cash flow, and maybe could this budget even show us and help us for year-end tax planning. And it provides an expense roadmap. It's going to show you your general ledger expense accounts, the labor distribution, what you have defined as direct and indirect, and segregating them as well on allowables. Okay, now we can go to the next slide. So when you prepare your indirect rates and you've got an annual budget, you're going to set it up. Remember, you're going to follow your general standard chart of accounts. And if you're in QuickBooks, which a lot are, you'll follow the P&L by class. You'll set up classes, and you'll know the classes represent generally direct costs, and then some classes could be your indirect, like fringe, if you have an overhead, or G&A, or BMP, or IR&D, independent research and development, or BMP being bid and proposal. So you can set up a lot of things for tracking this. Hopefully it's in your GL, your GL accounts and your classes, and then that would be represented in your budget. And the other thing is that, and here's a key, yes, you can use classes for pools. In other words, classes would be like a cost center. Like the cost center would be fringe, the cost center would be overhead, the cost center would be G&A, and you can break down G&A into subclasses such as bid and proposal, independent research and development, or any other thing, and just general G&A. So yeah, it's a good question. But the neat thing about building an annual budget is you do it on a monthly basis. You say, oh my, this is going to take forever. It's really not. I will show you in the end a quick pivot table, and the pivot table will basically lay out these things, and you're able, as you know, in pivot to make some adjustments. But the nice thing about having a pivot table is that in the entry table, the table that you do for which the pivot is generated, the reports, in that you can replace the monthly, like say now, let's pretend we're in March 15th of this year, and you're on a year-end 12/31. Then you would have actual data for both January and February. If you start to substitute the monthly data, like take your annual budget, make a copy, and say, I'm going to call this my target rate, annual rate, or annual budget. And then basically what I'm going to do is I'm going to put in the actual month of January, the actual month of February. And then what happens is I'm going to see what my indirect rate that I projected from my annual budget will start to adjust. It'll start to be, maybe it's high and it starts to go down, it goes up. But by the end of the year, let's say now I put in, at this point, I put in through September or October. Then I'm pretty sure I know what my year-end rate as I'm managing things. And I can see, like I say below there, you know, if I have fixed price contracts, you know, I know what I bid on these things. You know, if the rates go too high, then I know I might be losing money, but I need to know that ahead of time. I can also know by putting in 10 months or 9 months of actuals, what I need to do for cash flow, but also for tax position. As we get to October, we're thinking about, okay, if I'm a cash basis tax return, you know, how am I going to, you know, not hold off on invoices and maybe increase my expenses so that I don't have too much of a gain or profit. You know, all these things can be done as well as monitoring your indirect rates. Let me just see what else. The other thing is that, and I'll show you in a minute, a copy, a picture of one of these annual budgets. But one of the last things, and you can go if you want now, Nathan, and pull up the budget spreadsheet. But of course, once you have a projected rate, even if you don't have official provisional billing rates, as a fixed price and T&M contractor, you can use these things for funding mods that come up. You know, I have a new funding mod, I don't know the indirect rate, or for a proposal. Now, I'm only going to show you a picture of this, but you can see the different months there. You can see the GL accounts here going down. This is obviously a 12/31. And you can see, therefore, with all these things, I have an entry table, which I'm not showing you right now, but I can insert what are the actuals for June, for July, for August through August. And then with a hybrid of 4 months later, I'm going to get a better idea of what my rates will turn out to. And if you can go to the last tab, tab 5, Nathan. And this one is similar to what you just saw by expense account. And basically in this column, I put the direct cost, in this, the indirect, and even here, they can see that we're tracking unallowables. And so the G&A rate basically is, in this case, they have a single G&A rate. So in this case, also their G&A is very high because they don't have an overhead, and the overhead and the G&A are one. So this one is the numerator over the denominator, A over B gives me 133.54. And it's exclusive of the unallowables, and yet I know my total costs. And because someone like Steve, we've employed Steve to do the compilation, we got all those nice numbers to reconcile back to, which is always important, you know, as accountants. And then you can see the rate. The fringe is very low. This is a membership where members and LLC drive it. So it's a different kind of entity. But hopefully this gives you an idea of how the annual budget really can help you to compute and forecast indirect rates. And although it's very important as we focus with DCAA and the provisional billing rate requirement, it's a good management tool. It's another thing besides the compilation, and that's what we're trying to present today. Different specialized tools that smaller government contractors can use so they can better manage and better comply with the government. And now we're excited that we have Yev, and he's going to talk about some of the IT solutions.
Perfect. Yep. Thanks, Paul. So as we alluded to earlier when we were beginning the presentation, just want to briefly share a couple of systems or applications that we're seeing in the outsourcing space that our clients like to use just to streamline some of their processes, primarily as it relates to accounts payable and timekeeping. And then I'll briefly just discuss some of the differences between QuickBooks Online and Sage Intacct, which is a very powerful solution we're seeing our clients use. And so first off, beginning with on the accounts payable side, with Bill.com, it's effectively replacing or handling your accounts payable for you. It's a cloud-based accounts payable management platform. And what that, I guess, functionally means is that if for those of you that are using QuickBooks Online, and in QuickBooks Online, you have that vendor space, basically your AP module in Bill.com or in QuickBooks Online, Bill.com effectively replaces that so that all of the transactions relating to AP are now done in Bill.com. There's an integration back to QuickBooks Online, and Bill.com becomes your system of record for accounts payable. And where it becomes particularly helpful is Bill.com has been and continues to improve their artificial intelligence capabilities. And so with every customer signing up for Bill.com, they get a dedicated what's called an inbox. And that's similar to many of you, I'm sure, have a dedicated email address where you instruct your vendors to send their invoices to. So similar concept with Bill.com, you get a customized email address. It's going to be an @Bill.com. So a lot of our clients, they basically have the name of the organization, AP@Bill.com. That now becomes your inbox. So what that means is that you then provide that email address to your vendors. Your vendors are going to start sending their invoices, their emails with their invoices to that email address. Bill.com then stores that email with the attached vendor invoice in this inbox. And then behind the scenes, the artificial intelligence from Bill.com is reading those invoices sent to the inbox and coding them for you and doing its best estimate and best guess of how it should be coded, to whom it should be routed for approval, things like that, so that you're cutting down on the time actually spent processing these invoices. And then as it relates to audits and really any assurance engagement, both I suppose audit and reviews, Bill.com is built with audits in mind. And what I mean by that is because now Bill.com becomes your system of record for accounts payable, it's storing all of the information, all of the audit trail relating to who approved an invoice, when did they approve, when was the payment issued, how was the invoice coded, by whom. And the good thing about that is that for those of you that have undergone an audit and know how much you may have to pull in the way of invoices for the auditors to do their accounts payable testing, now what we do and what a lot of our clients do is they provide a read-only auditor access to their auditors to Bill.com so that the auditors are doing all of that testing within Bill.com and they're no longer asking you questions and they can see everything they need to see. They see the copy of the invoice, they see when it was paid, who was it approved by, and all of that. And then finally, I had already alluded to this earlier, but Bill.com is synchronized with QuickBooks Online, Intacct. And so what that means is that, again, you're doing all of your AP processing within Bill.com, and then all of those transactions are then synchronized back into QuickBooks Online. So accounts payable is in sync, the balance is in sync between QuickBooks Online or Intacct and Bill.com. And then before we move on the bottom here on the left-hand side, just a brief screenshot just to show you how customizable those approval workflows are in Bill.com. And so in this case, you can see that you can set up settings to say, whenever I receive a vendor invoice that's greater than or equal to a certain amount, a dollar threshold that I'm sure a lot of you have as far as dual authorizations, you can specify Bill.com to have a certain amount of approvers, and then you specify who those approvers will be. And again, that's addressing the internal control of having dual authorizations or perhaps triple authorizations for any invoices that are over a certain dollar threshold. And that's certainly something that the auditors like to see, that anything, let's say over $10,000, depending on the size of your organization, should have 2 approvals before payment is issued. And then on the right-hand side, this little screenshot is just showing you how in Bill.com, for a particular invoice, you see who approved that invoice, and then perhaps more importantly, when did they approve it? So you can see the first 2 were approved on July 2nd, and then the third approver approved on July 7th. And again, that's all saved within the system. So that means that the auditors have everything they need to see, and they can do their testing directly in the system. And real quick, even on the rightmost side of the slide where it says notes, the other good thing about Bill.com is if there's any questions about how a bill should be coded, you can store that conversation and directly attribute it to a specific invoice in Bill.com, so you can maintain that trail of, oh, why do we decide to code something like this? It's all stored there. And so real quick, this is just a brief screenshot of what the artificial intelligence capabilities look like. And again, they're constantly being improved by Bill.com. So what's happening here is on the left-hand side, there's a little orange, yellowish box around this item. And what this is demonstrating is that in Bill.com, you're effectively training the artificial intelligence. So you're all the various data points from an invoice that you would normally be inputting into your accounting system, whether it's the invoice number, the total amount, the due date, invoice date, the vendor. What you do in Bill.com is you highlight those fields, those data points with this orange yellowish box. And then you drag that box over on the right-hand side where you see all the vendor name, invoice number, payment terms. You drag that into those specific data fields, and you're teaching the artificial intelligence to say, the next time an invoice comes in from this vendor, I already know where to look for all these pieces of information, so you can cut down on the time to process the invoice, so that all you're doing at that point is just reviewing it, make sure that it all looks correct, approving it for payment, and then hitting the button to submit the payment, which Bill.com again handles for you. So with that being said about Bill.com, switching gears a little bit to timekeeping. So Nexoni is one very powerful system that we see some of our clients use, and we think perhaps it's one of the more powerful timekeeping solutions out there. So as you may imagine, it essentially allows you to do project and job costing from anywhere where you have an internet connection, and it allows you to have customizable workflows for approval workflows for ensuring that the time is approved, and then expense reimbursements and employee expenses, those are approved as well. So it's not only a timekeeping solution, it also has employee expense accounting as well. And again, so the whole goal here, obviously, because it's a cloud-based solution, it's allowing you to hopefully decrease your cycle time for invoicing. So you're not scrambling at month end in the beginning of the next month, trying to get everybody to have their time in, making sure that it's all approved, it's all correct. It's all done through the system. If anybody sees something being coded to the wrong project, it could immediately be rejected with a comment in there. So it's all fixed, so that hopefully by the time you're ready to do invoicing at the beginning of the next month, all of the data in Nexoni is correct. It's all been approved. It's all been vetted. And now you can start your invoicing, and you have comfort that you're invoicing correctly for billable time. And then as it relates to DCAA, there's some built-in settings in Nexonia that kind of, I think, address a lot of what the auditors would normally want to look for. So for instance, you can set up settings where it prohibits users from entering time for future days, and it prohibits users from deleting time or expenses that have already been approved. So things like that. And I think, I'm sure Paul can speak to it, but I'm sure DCA auditors like to see those kind of things and specifically see them built into the system, as opposed to kind of having a human actually ensure that there's compliance. So to the extent that it's built into the system, there's really no way to bypass the system settings. And then finally, Nexonia, as with many systems nowadays, it gives you the customizability to create custom fields, custom tags, custom data points to track specific pieces of information, whether it's financial or perhaps more operational within your organization. So on top of, being able to code time to a project, you may want to be able to code time to a specific task or track it against department, things like that. So it offers you the customizability to tailor it to the kind of the key data points that you want to track for your organization. And so real quick, just a brief kind of screenshot of what it looks like for the users. On the left hand side, it's kind of the desktop version, and as you can see, you can add in your time, code it to a specific customer, project, task. And here we're not really demonstrating the power of the customizability, but again, if you wanted to track time or anything like that across other data points, you create those customized fields, and then your user would have the ability to code against those custom fields. And then on the right-hand side, as with many third-party applications these days, they have a mobile app. So any of your employees that are out, the billable staff out potentially in the field or at the customer site, it's just an easier way for them to make sure that they can stay compliant with timekeeping policies, enter in their time daily, and have it all ultimately synchronized into the desktop version, and then ultimately your accounting GL system. So with that being said, about these third-party applications for both timekeeping and accounts payable, just brief kind of commentary about QuickBooks Online versus Sage Intacct, what we're seeing on our end. So I'm sure a lot of you that have used QuickBooks Online or are continuing to use it, I think it's safe to say that it's a pretty simple software for relatively smaller organizations. And I think the big benefit is that it's pretty simple to use for many users that perhaps don't have the traditional accounting background. So it's set up in a way, it has the simple, easy to use accounts payable modules, accounts receivable, and then reporting, so that again, if you're not a CPA, if you don't have an accounting background, you're able to pay your vendors, you're able to process their bills, and conversely, you're able to bill your customers, you're able to receive payment and track all of that within the system, and then do relatively simple reports and the standard financial statements generated out of the system. And then by virtue of QuickBooks Online obviously being cloud-based, they have a website dedicated to them. It's called www.apps.com. And that's effectively their QuickBooks Online approved list of third-party applications. So Nexonia, I believe, is on there. It's essentially vetted third-party applications that synchronize and integrate well with QuickBooks Online, that allows you to make QuickBooks Online perhaps address some of those things that may not come with the normal QuickBooks Online subscription, but allow you to do it through the use of a third-party application. So an example that comes to mind, for instance, is cash flow forecasting. So QuickBooks Online does not have a module or good functionality, strong functionality to do robust cash flow forecasting, but there are third-party applications on this apps.com website that do that, that do address that need, and that do connect with QuickBooks Online, so that you're creating these cash flow forecasts not in Excel, you're creating that in the third-party application. And the third-party application, because it's synchronized with QuickBooks Online, it's still using your accounting data. So you're not using data that doesn't jive and doesn't reconcile back to your accounting records. So that being said, Sage Intacct, the way I would describe it, it's an ERP solution as opposed to QuickBooks Online, which I would argue is not a robust ERP accounting platform. And I think a lot of people, when they think of ERP, they immediately think of complexity. They think of it being cumbersome to navigate, just a little bit too complex for the average user. But the thing about Sage Intacct is that that's exactly what they wanted people to not associate with them. So despite its power, despite its robustness, it's very easy to use. It's quite intuitive. And in the core package that Sage Intacct provides to its customers, it has the modules that you wouldn't have in QuickBooks. So things like purchasing and quote to cash. And I highlight here custom reporting. So QuickBooks does have an element of customized reporting, but it's certainly very limited when compared to the kind of reporting that Sage Intacct offers natively without having to sign up for an additional module or anything like that. And then I highlight here, on top of the core accounting modules that included in the standard Sage Intacct package, they have additional modules, things like budgeting and planning, inventory management, and something like fixed assets, where you can have the module directly in Sage Intacct. So you're not then manipulating spreadsheets in Excel and then potentially have variances between what you have in your Excel-based schedule versus your accounting system. With Sage Intacct, you can have it all live in the system, all these different modules, they're interacting, all the data is integrated, and then it's all posting to your GL. And then from my perspective, I'm sure other people have different opinions, but I think one of the biggest benefits of Sage Intacct is just, again, how powerful its reporting is. And what makes its reporting, I think, so powerful is their use of having so many multiple dimensions. And so when I think of dimensions, when you think of QuickBooks Online, a dimension, I would say something like class or location. So it's effectively a tag, so that on top of having your natural accounts in your chart of accounts, you can then tag a transaction. It posts to, let's say, meals and entertainment. But if you want to track that transaction that's posting to meals and entertainment to a specific location of your company, you can tag it with this location. So I mentioned that because in Sage Intacct, you can have more than the 2 or 3 standard dimensions that QuickBooks comes with. It has up to, I don't remember the number now, but I think it certainly has more than 3. I want to say 7, but I can confirm that. And the beauty of having those dimensions is that now, on top of tracking things like perhaps maybe location, you can now track things like tasks that employees are working on. What about where they are as far as the job site? Which department are they part of? Things like that. And then by having those data fields in Sage Intacct, you can now report on those data fields at the end of the month, whatever your cadence is. And then finally, Sage Intacct, it has a very strong module for multi-entity. If you have subsidiaries and things like that, again, so you're not performing consolidations and eliminations in Excel, which I'm sure a lot of us are doing. It's all built into the system. You're tracking all of the various entities, chart of accounts, and other transactions in Sage Intacct. And then using the consolidation multi-entity module, all of the data is synchronized, so you can very quickly prepare consolidated financial statements at the push of a button.
Hey, Gov,
Mhm.
I just want to interject because I did have the opportunity to use the Sage Intacct. I know they have a project module, and that's very helpful in structuring for government contracting. And I understand it also has a labor distribution. And so project module is important for segregating costs and funding. The labor distribution is extremely important because, you know, that way it shows how people charge to a job or what jobs have what people. And then we're also in the process of developing indirect rates that, like you say, because of its customizations, you know, we can include indirect rates, which of course QuickBooks doesn't integrated, but we will have that integrated, and also tackling cost reimbursable invoices.
Yeah, that's a great point, Paul, and I appreciate you mentioning that. And that's a great segue into the final slide that I have, just speaking about Sage Intacct and specifically the benefits that we see as it relates to the nuances of government contracting. So as Paul kind of alluded to earlier, the ability to do labor distribution in Sage Intacct, and one of the very powerful features of the system that allows for that to be more automated is this concept of dynamic allocations, where you can basically teach and code without having a needing coding experience or anything like that. You're telling Sage Intacct how to allocate that labor on a monthly basis or whatever your cadence is, so that it's all automatically done by the system on a recurring basis without you having to check it and manipulate spreadsheets and things like that. You create those rules in the system and it does it for you. And then as it relates to revenue recognition, particularly for those of you that have fixed price contracts, I know some of the nuances as it relates to GAAP and IFRS. So revenue recognition on those contracts, whether it's milestone based or percentage of completion, Sage Intacct has within their RevRec module the ability to create revenue recognition so that it posts to your general ledger in accordance with those different nuances depending on your fixed price contract. And ultimately, that gives you the comfort that when you come around time for your audit, your auditors are seeing that, yeah, you're recognizing revenue in accordance with the guidance as it relates to fixed price contracts. And ultimately, by virtue of that, you're ensuring compliance with ASC 606 and IFRS 15, the revenue recognition standards for both of those reporting frameworks. And then finally, I alluded to it earlier, but again, with the additional dimensions that you have to track your financial and non-financial information on in Sage Intacct, that then you can use to report on and create some of those metrics and reports that are perhaps, I would argue, more applicable to government contractors. So P&L by project, Paul alluded to the projects module. labor utilization. You can create a non-financial metric in Sage Intacct for employees, things like that, and then tracking budget versus actual by project, all of that. That again, I would argue is pretty important for a government contractor, and you can do it all now Sage Intacct as opposed to manipulating in Excel.
Hey, yeah, doesn't this also do dashboards? I've seen dashboards done. And
yeah, absolutely. So it certainly does dashboards, and it's a beautiful looking dashboard. It's powerful, and again, because you have all these different dimensions that you can report and create these dashboards on, you set them up once, you can share them with different users. So if you have a dashboard created perhaps more for your operations folks, if you invite them as a user into Sage Intacct, they may have a specific dashboard just for them. And
yeah,
so again,
for the KPIs, right?
exactly, for the KPIs, and if you, again, maybe for the financial folks, they need something more reporting on the typical financial matrix like current assets, things like that, so they can have their own customized dashboards. So absolutely, Paul, great point. And so finally, before we wrap up, we're going to be on our last polling question. And our question is, how would you describe your AP and timekeeping processes? So is it A, basically relying on paper checks and to pay your vendors and having your employees submit their timesheets by hand? Is it a combination of kind of paper checks and perhaps maybe electronic payments, and some of your employees are using electronic timesheets, and then you're then taking that data and inputting it manually into your accounting system? Or are you relying on third-party applications or have a way of doing this all electronically and digitally in your accounting system, and thus you don't have any issues or maybe issues with inefficiencies in particular with these processes, or none of the above? So while everybody's recording their responses, I'm going to provide the final CPE word you'll need. Again, you'll need this word to get CPE credit. The final CPE word is settings. Again, just a reminder, you're going to get a survey, and if you need CPE credit, you'll need to enter in the 3 CPE words I've given out at this point. And the final CPE word is settings, SETTINGS. Okay, perfect. Well, I'm really relieved to see that nobody selected A. I think it looks like the good thing is most of the attendees are in a position where they don't have any issues with their accounts payable and timekeeping processes, which is music to our ears. And I suppose some of you do have that situation where you do have kind of a bit of manual data entry. So something to consider, like we shared earlier, Bill.com, potentially Nexonia, and there's other ones out there. So just keep those in mind. Okay, well, I think we're at the point. I think some questions came in. We may have time for 1 or 2 questions from the audience. And it looks like the first one, Paul, I think this one is for you. So does DCAA audit for the accuracy of your provisional billing rates for the upcoming fiscal year? Paul, I think you may be on mute, sorry.
Thank you for reminding me of that. Basically, DCAA, though they may audit for accuracy, it really isn't a requirement that you can be assessed against or penalized for. The other one I just want to bring up, someone had brought up about the SBIR, which is Small Business Innovative Research and Indirect Rates. And basically, most of the SBIRs, from my understanding, phase 1, phase 2 start out as fixed price. And then if you're fortunate to make it to phase 3, it's cost reimbursable. But again, the importance of knowing what your indirect rates are and its impact in a fixed price environment is extremely important.
Perfect. Thanks, Paul. And then Steve, I think this may be a good question for you. So what are some of the initial documents that we should provide for if we're undergoing a first-time compilation engagement?
Yeah, great question. The first documents I recommend is your articles of incorporation, so we can determine the structure of your business, and then any source documents at year-end, maybe a bank statement, GL activity, just kind of, we can survey the types of transactions, activity during the course of the year to help us get started with planning the compilation. So those would be my initial documents that we would request and use to get started with the process.
Perfect. Great. Thanks, Steve.
Can I just insert one last thing? Someone had asked, and this is for you, Steve, would there be any specialized disclosures for the PPP loan in the compilation?
Sure. It depends on the loan forgiveness. So right now, if the loan forgiveness is in process to be forgiven by the SBA, we would just disclose that in the notes. And if it has been forgiven in the year of forgiveness, we would disclose that it's been forgiven and included in other revenues. So it depends primarily on if where they're at in their process of forgiveness. And we have different disclosures to kind of sort of disclose that process.
Perfect. Thanks, guys. Well, we're, I think, right on time, maybe even a minute over. So if we didn't get to any of your questions, please feel free to reach out to us directly. Our contact information is listed here. But with that, I'd like to thank everybody for attending the webinar today. And again, if you have any questions, reach out to us and feel free to follow us on social media at GRFCPAs or visit our website, www.grfcpa.com, for upcoming events and alerts that we have. And just one last final reminder, remember to complete the survey that's going to be emailed to you for CPE credit. And thank you all for attending and have a great day.